Saudi Arabia's economy is in its best shape in more than a decade thanks to its most important industry, the extraction and sale of oil. The world's largest exporter of the commodity says GDP grew 9.6% in the first quarter. That's the biggest expansion since 2011 and much better than forecast. Growth in its oil sector topped 20%, while income from non-oil industries rose 3.7% year-on-year. Saudi Arabia relies on oil revenues for as much as a third of its domestic output, so recent price hikes tied to the crisis in Ukraine have given it a big windfall. Crude prices have risen around 40% since the start of the year, with the benchmark Brent trading at around $106 a barrel. Now, for more, let's go to Han Tan. He's the chief market analyst at the Exinity Group in Abu Dhabi. Welcome back to the program, Han. Now, a big quarter for Saudi Arabia because of these oil prices due to the crisis in Ukraine. But even if that conflict ends today, which obviously it won't, oil prices aren't going down anytime soon, are they?
Yeah, indeed. So we expect oil prices to remain well supported even going into next year. So as you rightly pointed out, even if the conflict ends immediately, it doesn't mean that these sanctions that are already in place and perhaps the ones that the EU are working towards, those won't be ended or seized immediately either. So the prospects of more oil being taken out of the market ensures a tightening market structure. But of course, we have to remain vigilant and watch out on the demand side, given China's ongoing lockdowns. But overall, again, we find ourselves in a supportive environment for oil.
Now, Saudi Arabia has said for years that it wants to diversify its economy away from just relying on oil revenues. What does this do to those efforts?
Indeed. So with the additional income that the government gets on the fiscal side due to these higher oil prices, the Saudi Arabia is expected to post a budget surplus for this year, and not just for this year, but perhaps over the coming years through the middle of this decade. And so the idea is that this surplus can then fund its longer term ambitions that you mentioned earlier, right? So I think overall the goal is to have the non-oil sector account for about half of its GDP within the next 8 years. So I think those sectors include entertainment, auto manufacturing, and even tourism. So again, the idea is that these additional receipts should fund those longer term ambitions.
So can we look at Saudi Arabia's economic numbers as an indication for how maybe the other big exporter of oil, being Russia, how its economy is doing?
The short answer is no, because, I mean, obviously the kinds of sanctions that are being placed on Russia, be it via energy exports or via financial flows, I think, those sanctions are having a far more detrimental effect on Russia compared to the likes of Saudi Arabia, right? Despite those elevated oil prices, hence Russia is expected to see a recession, not just for this year, but likely for next year as well, as they contend with these sanctions that are having a choking effect on its economy.
All right, Han Tan out of Abu Dhabi, thank you for joining us.